Hey there, everyone. My name is Jason Lim. This is People Building Businesses, a podcast from the team at YBF Ventures. YBF's mission is to help startups to scale, scale-ups to succeed, and corporates to innovate. We do all that from our spaces in Melbourne and Sydney, and if you want to find out more, head over to ybfventures.com. This is our very first podcast since the world's been turned upside down due to the COVID-19 pandemic. And joining us today is the co-founder of Birchal, Matt Vitale. Birchal is an equity crowdfunding platform that allows everyone the opportunity to invest in Australian brands. A few of the recent successes include women's-only ride-sharing platform Sheba, Internet of Energy startup RedGrid, who are members here at YBF Melbourne, superannuation startup Gig Super, and sustainable denim brand Outland Denim. And those are just among a few of many, many companies that Birchal's really helped to raise investment and get that next ladder up the steps to success, I suppose. So I'm super keen to figure out how the Birchal teams built the company, super keen to figure out how Matt's led the company, and especially during COVID-19, how Birchal has navigated the effects of COVID-19. So Matt, welcome to the podcast. Great to have you here.
Thanks, Jace. Great to be here.
We usually start the podcast in a different way. We usually talk a bit about your background, where you grew up, and we'll get to that. But given the world's a bit different today than it was a couple months ago, I wanted to start the podcast a little differently.
Sure.
For the listeners who aren't familiar with Birchal, could you perhaps give us a quick overview of what the company is all about?
So, Jace, you gave a pretty good introduction before. I'm not sure if I can top that, but let me try. So Birchal's an equity crowdfunding platform. We like to focus on brands that have a strong consumer proposition. It is really about dispersing ownership among people that love businesses and want to be involved in them. It's fairly new in Australia, but this has been a very common way of funding early stage businesses overseas, particularly in the UK, for many, many years. The key game changers of that have allowed us to do what we do is that small proprietary limited companies can now have a potentially unlimited number of investors, and we can advertise these securities offers online. So that means that brands that have a strong consumer proposition can invite their most passionate customers and advocates to get involved. And it's actually a really powerful thing at scale, because rather than just having a few investors, we think businesses are better businesses when they have an army of brand ambassadors that love them and will support them in whatever they do.
That's awesome. And obviously, the world's changed a lot due to COVID-19. And jumping straight into it, how has the last few months been for you and the business, given the consumer focus of Birchal? Obviously, retail spending is down now, consumer spending is down, and also on the investment side of things, investors seem to be a little more skittish now in terms of making new investments. So how has it really been for Birchal?
Yeah, I think there's probably a few phases that we went through. The initial phase, it was really just being here for businesses. So we're committed to providing efficient, cost-effective capital to businesses, who are raising money at a critical inflection point and want to grow and achieve great things. And we had a lot of businesses in our pipeline that, they're working pretty hard on a cap raise, and then the world is crashing down around them. So it was really important to us to be sensitive to what everyone else was going through and really listen, reach out to businesses that we'd funded previously, understand if there was anything that we could do to help, not just in raising capital, but just anything. And that was probably the first phase that we were going through, is really just listening and seeing if there were opportunities or anything that we could do to help the businesses that were within our network. We had one campaign that was live during the first escalation of COVID in Australia. It was for the CBIN project. Now, they'd already raised $1 million, so this was pre-COVID. So, in some sense, they'd put a lot of the hard work behind them, and they'd gotten off to a really good start. And it was a pretty nervous few weeks to see how the market would respond because, ASX had dropped 30% in value. There were discussions with large investors that were ongoing, which were difficult to close because naturally they were distracted by other things that were going on. But around 600,000 was raised in the last 2 weeks of that campaign. And that was probably the height of the COVID disruption at the start when people were just really, unpacking what this meant for Australia and for the economy, which is an inspirational result because the campaign was dominated by smaller investors. But it's important to remember CBIN projects, it's you can't buy a CBIN. They're bins that sit in the water that collect waste plastic. So the people that were investing in that business were committed to a company that is serving a higher purpose, cleaning up ocean waste. And people with capital were still prepared to commit capital to a project like that, even in, perhaps unprecedented uncertainty in the economy. So that was really encouraging, and it really kind of set up what has evolved over the next few weeks and what's brought us to this point. And I think the theme is that we're still able to do deals for companies, but they're dominated by smaller investors. So the deals look a little bit different. They're perhaps not as large, and the larger check sizes are perhaps harder to come by, but that's what crowdfunding does really well. We put large groups of people committing smaller amounts of capital together so companies can achieve great things. And we've since gone on to raise for Indigo Power, which is a regional solar grid for a regional area in Victoria. They hit their maximum target of 300,000 in a few days. And you mentioned Outland Denim as well. So it's another, great brand with a socially focused mission, and they raised close to 1.3 million last week. So it's certainly different than what we expected this time of the year would be at the start of the year, but we're still doing deals and connecting businesses with customers. So it's great.
That's fantastic, and it's great to hear that you're still able to help these companies, especially in such uncertain times. How do you think COVID-19 will change the investment sector? You mentioned a lot of smaller investors, for example, putting money into these companies raising capital. Do you think that's going to be a theme that continues on in terms of retail investors or smaller investors putting capital in, and the large institutional investors shying away from the startup sector?
It's a tough one to answer looking out to the medium to longer term. I think, larger institutional type investors, that they invest, that's what they do. So at some point they're going to be deploying capital to opportunities that they like. Again, I think predictably, what I'm hearing is that a lot of the funds have been protecting their portfolio companies and not taking new meetings and not originating new deals. For angel investors, that's a tricky one because, an angel investor is a very broad category. So they, are in many different shades and colours and have different things going on in their personal and investment lives. But what we've seen is in times of uncertainty, people are understandably more reluctant to commit, the $10,000, $50,000, $100,000 check. But businesses that have a strong consumer proposition are still able to get large numbers of investors to commit small amounts of capital. And I think that's probably been the encouraging advantage of what we do. Another observation that we'd make is that there's been a lot of retail investors that have gotten into the market recently during this period of volatility, wanting to trade in the market. ASIC released a report a couple of weeks ago about how much money had been lost by retail investors that were day trading for the first time because they'd seen such wild market swings. Although it's not great for the investors that have lost money, the encouraging trend that I observe from that is that retail investors are having an increasing appetite for risk. And we saw this with crypto over the last few years, is they're looking for opportunities to grow their wealth outside of what Australians traditionally have used, which, is blue chip mining stocks, banks, and property. And that's what we need to do as a country. We need to start looking for higher risk, higher return opportunities. And you would expect me to say this, but early stage startup businesses are the best place to do that for the economy. And, we'll create jobs, we'll fund the businesses that will drive the recovery on the other side of this crisis. And equity crowdfunding, I think, has a huge role to play in that because, as I mentioned, people can take a stake in a business for a few $100s. It's much easier to have a diversified portfolio approach to early stage businesses rather than in the old days. If you're an angel investor, minimum investment might be $10,000 or $20,000. You need a reasonably sized amount of capital to take a portfolio approach. 10, 15 investments at $10,000, $20,000 a pop. Not everyone has that, but now, provided that we can maintain good deal flow, investors can take a diversified approach to startup investing for a few $100 or a few $1,000s, which I think is really exciting.
Absolutely. And, given that Birchal is a platform that connects investors and startups, you obviously see both sides of the table. On the startup side, a lot of companies right now are understandably going through some difficult times in terms of cash flow, being able to navigate the next couple of months. And I'm sure a few of them are thinking about raising capital. So have you been approached by any of these companies? What kind of advice are you giving to them in terms of raising capital in this current climate? Yeah,
look, absolutely. We're approached by companies daily, and I suppose it's spiked somewhat during the crisis, but certainly there's been a lot of businesses interested in what we do. The advice, look, I think the advice that is out there for that a lot of people are giving to startups at the moment is get absolute clarity on your cash burn, minimize unnecessary expenditure. Really kind of batten down the hatches and preserve your runway for as long as possible. In terms of raising capital, it's a different environment now. So deal sizes are going to be smaller. Investors are looking for, different things I think this endless pursuit of growth and growth at all costs is questionable in this environment. I think businesses that are profitable and have a pathway to profitability and that are sustainable in a financial sense, but obviously in a broader sense too. But they're the ones that will really shine, and I find it somewhat easier to raise capital. But the old days of an endless endlessly chasing growth with the belief that capital will be there to get you to the next stage, that's not sustainable anymore. So businesses really need to focus on being businesses and generating profits.
That's awesome. Thanks for the quick rundown on how COVID-19 has affected your customers, your investors, and also your company. So we'll wind the clock back now to your early days, Matt. Could you give us a bit of a rundown about where you grew up and how you ended up being where you are today?
So I've lived in Melbourne all of my life. I grew up in Carlton, the son of a chef restaurateur. So Lygon Street in the 80s and 90s, the halcyon days, many people say. most people I work with at the moment don't remember. But so my family's been involved in the hospitality industry for generations, and I suppose that's kind of informed somewhat my business endeavors and my professional focus. But I studied law. I worked as a lawyer at Hall and Wilcox and then at Ashurst for a while in financial services. I'd observed what was happening in the UK in the equity crowdfunding space pretty early on, and made a submission to the Corporations and Markets Advisory Committee about the need for Australia to have an equity crowdfunding regime. Alan, my co-founder, who had co-founded Possible at that time, also made a submission to that committee. And then the equity crowdfunding legislation took several years to even look like it was going to be passed. And I remember discussing it with some of the partners that I worked for, telling them what was happening in the UK, and them saying to me that will never happen in Australia. It's too risky, and they're not going to open up this kind of investing to retail investors. But here we are, and Alan and I got chatting probably about 4 years ago, a bit over 4 years ago now, about how Possible would play in the equity crowdfunding space. And we had a decision to make whether it would be another service offered by Possible or whether we would create something new. And we decided to create something new. And I think the key reason for that is Possible is a very well-known reward crowdfunding platform, one of the first globally to actually call what they were doing crowdfunding. But it's essentially an unregulated business. It doesn't have a financial services license, and there's a lot of stuff that we have to do and be aware of at Birchal that we didn't want to burden Possible with. And also, they're fundamentally different businesses. So we created something new. We called it Birchal, and here we are, several years later, and helping great businesses do great things.
That's awesome. I've actually met Alan a couple of times. Great guy. And I think we sat on a roundtable with local government once when they were trying to figure out the early days of equity crowdfunding. So, awesome story you've got there. How has the transition from corporate world to startup world been like for you? And you've obviously grown up with a bit of that entrepreneurial blood and that entrepreneurial background. So was it a big shock for you, or was it, you were kind of expecting what you walked into?
Yeah, it's funny. I'd got out of private practice, funnily enough, to run a food festival. So perhaps a whole other podcast on this, but I'd taken an interest in cooking American barbecue, and made some friends in that space. Had been to the States a couple of times, down the deep South, and some of the temples of barbecue where people go and worship smoked meat. And my wife and I kind of fell into organising this food festival. So that was becoming a pretty intense labour of love, but an intense side project. And we'd started having children. I have 3 children, and it was becoming increasingly obvious to me that long-term private practice as a lawyer probably wasn't consistent with what I wanted out of life, and good home life and spending time with my family. So I decided to leave private practice, and I was taking some contracting jobs, but also running the food festival. And so that was my kind of entry into, or exit from corporate life, was in, going from being a financial services lawyer to running a food festival. And then still kind of keeping my toe in the water, if you like, with contracting legal jobs, mainly at banks. And then Alan and I got talking about equity crowdfunding, and then I kind of got back into startup life, but still as a lawyer. So I'm still a lawyer. I still perform a co-founding and general counsel role for Birchal, which is we have a pretty important legal compliance side of the business that I need to look after. But I also really love just working with lots of entrepreneurial people that are focused on doing great things. And, it's been a windy road, but I feel like I've found the role for me. So.
Awesome. Take us back to this early days of Birchal as well. What was your first steps towards actually creating the company? Was it going after that financial services license, or was it something else?
Yeah, look, that was a big part of it. It's a new regime. So, these things don't happen very often, that a new financial service is created. So, there was a bit of back and forth. First of all, with the laws getting passed. A lot of monitoring the federal parliament website and looking at the passage of the bills, which we became, experts on for a while, and then engaging with ASIC about how they were going to regulate and enforce the laws. So ASIC typically writes a regulatory guide once laws are passed. Applying for a license was, I'd done this before. I'd never for myself, but we, had an understanding of the process that we needed to go through. But it's interesting because one thing is you need to demonstrate competence, that you have the appropriate skills and experience, which is tricky in Australia because you have to show that you have the right skills and experience to provide a service that's never been provided before. So not without its challenges, but thankfully we were among the first 7 to receive our license. We have a third director in the business, Adam Vise. So he was head of equity capital markets at ANZ Securities for many years. The three of us really kind of round out what we think is the right skill set for a business like this. But then building our process, historically, making a public offer of securities would cost a business as a public company, hundreds of thousands of dollars. So, and months to prepare. So we needed to build a process that took a few weeks and cost as little as possible, because this regime is for early stage businesses that aren't big and sophisticated with teams of professional advisors to do something that has historically been very tricky and very expensive, and that's been a process of first principles, iteration, experimenting. And, we made some mistakes at the start, but we learned from our mistakes. And, I think the team works really well together. Alan's, peerless in his understanding of what motivates a crowd and how to position these offers in the market. And, Adam and I have been really focused on providing, sophistication to these capital raisers, but understanding that we're working with limited resources. So how do we do this? Make sure that we're managing risks, complying with the law, but also achieving a good commercial outcome for people, because it's tricky.
And it seems like you've got the right founding team as well. Someone who came from financial services, someone who has that law background yourself, and Alan in the tech space. What's the dynamic between the founders like? Is is there a lot of tension in there, or do you usually get along harmoniously?
No, like we absolutely we get along, and we don't get along just the right amount, because as you can imagine, there's got to be a tension between being commercially focused and getting the right outcome for your company, but also balancing that with our obligations as a financial services licensee. So, our role is to ensure that the offers are run in accordance with the Act, and that we're not misleading and deceptive, and all of the compliance things are ticked off and done correctly. We don't want companies to worry about this stuff, though, because we have a financial services license. They just expect that we get that right. So every campaign is assigned a campaign manager, and the campaign manager is really the coach. We have a 10-week process, and the campaign manager is there to keep a company engaged through that process, telling them what success looks like at various stages in the process, but keeping them moving along ultimately towards executing a successful crowdfunding offer. The role that I'm more involved in on the legal and compliance side is making sure that we're able to prepare an offer document, and that the company is doing everything that it needs to execute these offers in a way that complies with the law. And the fact that we've been able to host over 40 successful offers since we launched in 2018. We did 14 in the last 3 months of 2019, last year. It's a high volume platform. It's the process, it can absolutely be improved, but it's working pretty well.
Yeah, and it's really interesting because Birchal is a company that needs to comply with financial services laws, regulatory requirements. Most startups have that mentality of move fast, break things, and that doesn't apply in your case. You can't really, well, in one sense you can, but on the other hand, you have to follow all these regulations. Was it a lot of work for you getting a financial license? Was it a multi-month process, or was it something straightforward? Or
no, it was months. Look, it was years. Like if you count the passage of the law and waiting for the regime, for the law to be passed ultimately. But yes, like we're a financial services business. But we, the way that I describe us to companies is, we're more a marketing company than we are a financial services business. We like to, let all of the legal and regulatory stuff, although it's taken care of, it kind of sits in the background. And, we spent a lot of time on the user experience and design of the platform to make it as, nice and frictionless as possible for investors that we're investing. And that was really our focus, is having a good understanding of what we needed to do from a legal regulatory sense, but then making it as beautiful as possible to work in a commercial sense.
Could you walk us through what happens when a company decides to raise money, to getting in touch with Birchal and ultimately making that public offer? Because it sounds like you've streamlined that process and made it so cost effective to make a public offer, when typically you'd have 100-page IMs. You pay advisors millions of dollars to underwrite the offering, etc. So what's the process like?
Yeah, it's it's essentially a 10-week process end to end. That can be shortened or lengthened, but it has 3 components which I'll walk through. We generally allow about 2 weeks to set up the offer. Or the campaign, if you like. And that involves creating the company profile. And Birchal's, as a platform, structured a little bit differently to crowdfunding platforms around the world. We say that we're more company or issuer focused than deal focused. So you'll go to a lot of crowdfunding platforms and The prime real estate will be the live deals page. These are the deals that we've got live at the moment. We have that page, but that's not what we drive our traffic to. We focus on the company rather than Birchal. So a company will create a profile and then maintain that profile, the same URL for their lifetime of using the platform. It's high-level information, so we're only talking about the company, the team, the business model, nothing about the offer at this point. We're also talking about the marketing plan and the PR media outreach plan. Once a company's completed all of that, then we move to the expression of interest stage. So an EOI is a time-based campaign, and all the company's saying at this point is, hey, this is us. We're interested in raising money. Would you be interested in investing in us? And we're taking full advantage of the relaxed advertising restrictions that crowdfunded offers have. So unlike other offers of securities, we can advertise these offers on any channel, which is pretty fundamental change to corporate and securities law. So Facebook advertising, other digital advertising, digital marketing is really important, email lists. So we're building this list of qualified interest. The questions that we ask at the EOI stage is, why are you interested in the company? How much would you be willing to invest? Through gathering this data, we're able to tailor how we engage with that list of investors, but also provide a company with guidance on how much they may be able to raise. Having completed over 40 offers, our data is getting better and better. So we look at how a company performs during the EOI stage and then form a view about how much they could potentially raise once they get to the offer stage. So the EOIs typically run for 3 to 4 weeks, although increasingly companies are telling us that a shorter campaign is better for a variety of reasons. And while the EOI phase is running, typically working with the company on the offer document gatekeeper process. So we have a template offer document, which we've adapted from ASIC's guidance, but basically working with the company to create the offer document so they're in a position to provide a draft offer document to investors towards the end of the EOI phase. The reason for this is we don't value companies. We'll form a view about pre-money valuation and other aspects of their deal, but we're just one data point. We feel that the most important source of validation are the investors that will ultimately invest in the offer. So being able to share a document in draft form to perhaps some of the larger interested investors is a really good way to sense check whether or not you've structured your deal and priced it appropriately. So then we move to the offer phase. So once a company's comfortable with all aspects of their offer, the offer will open. So we finalize our gatekeeper checks, which includes background checks on all of the directors, senior managers, reviewing the offer document to make sure that it complies, and then publishing the offer. All of the applications need to come through the Birchal platform, but the offer runs for 3 to 4 weeks as well. And again, companies are giving us feedback that they like shorter campaigns. During the offer phase, it's really important to get early traction. So these conversations that you have with EOIs before you launch are really important because they're likely to be the investors that will invest early on. But crowdfunding campaigns, they all have a similar pattern. It's a U. A lot of activity at the start, then it drops off in the middle, and then it picks up at the end. So making sure that you get off to a really good start will just set up the campaign to finishing strongly later. So that's the process.
That's great. Thank you. And for people who aren't familiar, who are listening to the podcast, how do these investors make money, and how does Birchal, in fact, make money out of these raises as well?
So Birchal's fees is pretty simple. We charge $900 for the expression of interest phase that I mentioned, $1,900 to review and publish the offer document. And then if the offer is successful, we charge 6% of funds raised. Now, I forgot to mention that an offer needs a minimum target and a maximum target. So to be successful, it needs to be past its minimum target within the offer period. If it hits its maximum target, we have to close the offer. The most amount that can be raised is $5 million every 12 months. But we urge companies to set a maximum target at a level that they think that they can hit, because we think that's best practice. Having a fully subscribed offer and turning people away is a great message, because it leaves the door open to doing something in the future.
Absolutely. And for the investors, do they get a return when the company exits?
Well, absolutely. The investors, they receive ordinary shares. So they hold the same stock as other ordinary shareholders in the business. It really depends on what the company does. So the opportunities to realize your investment are if the company is sold, if the company lists and there's another liquidity event. A service that we've been working on is a secondary market, a liquidity facility for shareholders. So we've applied to ASIC for relief to operate what's called a low volume market. Now, this relief has limitations. You can only facilitate 100 transactions and no more than $1.5 million in aggregate value every 12 months. But what we're hopeful of is that companies will use this Birchal trade facility to provide liquidity to some investors that want to realize their investments periodically. So, illiquid early stage investments, this is the thing. It's like you invest in any early stage business. When am I going to see a return, or how can I exit this investment? We see this as a good opportunity to perhaps release the pressure valve periodically. You may have some investors that want to, or perhaps need to get out. Hopefully, the majority of them would like to stay in for the long haul and realize the full value of the investment. But similarly, you might have some investors that perhaps they missed out when you were raising money, and this is the only opportunity for them to get involved in the business. So it's a service that we've spent a bit of time thinking about, and we think it kind of meets the particular needs of crowdfunded businesses. And perhaps now's not the right time to be launching this because, market volatility and whatnot. But I think when conditions normalize a bit more, it's a service that we're looking forward to providing to companies so they can provide to their shareholders.
Yeah, absolutely. And the secondary market seems to be picking up steam in places like the US and the UK, more developed startup ecosystems where exits seem to be taking longer as well, past that 10-year mark, past that 11-year mark. So I think, Birchal seems to be ahead of the curve when it comes to, coming up with these new products and offers. So kudos to you guys.
Thanks, Jez.
Before we end, I've got two more questions for you.
Sure.
Number one, since you see so many companies on a daily basis, what's your take on the tech industry in Australia? What do we do well and what can we do better?
I think that we can do a lot better at funding these businesses, in which you would expect me to say this, but I think too many businesses feel as though they need to go overseas to realize their plans. And, more often than not, we speak, perhaps some of the most exciting businesses we speak to about potentially raising funds through equity crowdfunding is, they see funding in Australia as an intermediate step, and that their future investors will be offshore investors. Now that makes sense because, in the States, it's got the largest pool of, venture capital in the world. But I mean, from an Australian perspective, like why should we lose these opportunities to other markets? I think we need to get better at funding early stage businesses and then providing follow-on capital for businesses that should remain in Australia. I think the COVID pandemic has shown that where you are physically doesn't really matter as much in terms of working and servicing customers and working as part of a team. So I dare to dream of a future of Australian businesses that are world beating in their markets against their competitors, but perhaps remain in Australia and are supported by an army of venture capitalists that will give them the capital they need to grow. So I think, we should absolutely be encouraging businesses to take on the world, but why can't they take on the world from Australia?
Absolutely. And that's a great segue to my last question, which is, being an Australian business yourself, what's next for Birchal?
Look, we see lots of opportunities for us to do what we do in other markets. I think COVID has been an awakening, I suppose, or an acceleration of us conceiving of going to other markets. I liken it a bit to a pace car, and it's a useful metaphor because really the cancellation of the Australian Grand Prix was the start of the COVID issue here, and I kind of think that the safety car is out at the moment. There's these stimulus measures that are kind of giving everyone a bit of breathing room. But, the economy hasn't been cancelled yet. The race will start again. So it's an opportunity for businesses now to, take the foot off the pedal a little bit, look around, assess the landscape. But what are you going to do when the race starts? And that's something that we're doing, and that's something that we're encouraging all businesses to do is look around and really consider the opportunities that lie ahead, because there are opportunities ahead. I think we've averted, hopefully, most of the catastrophic future or picture that was being painted for us a couple of months ago, and this will end, and then we'll need to get back to what we were doing. And I think there will be such drive and enthusiasm once we're able to do that there are some great opportunities for businesses, Birchal and others. And the other thing that I think is great is just the acceleration of some trends. I've mentioned work from home, but so many other things in different industries that have been accelerated by this crisis, because perhaps the things that were holding us back aren't so important anymore. Just looking at the advancements that were made in telehealth, and online video consulting for doctors. This is something that they've been talking about for over a decade, and they're able to accelerate in days, weeks. It's these kinds of changes that I think are ripe for opportunities for businesses to take, and it's agile early stage businesses that see those opportunities and put teams together to seize them. They're the ones that we want to help, and they're the ones that will make us a great economy.
Awesome. Matt, thank you so much for being on the podcast. Really enjoyed our chat and your insights. If someone wanted to get in touch with you to invest or to get their company on Birchal, should they just go to your website?
Yeah, go to the website or email me, matt@birchal.com. I love chatting with people, and I've never regretted taking a meeting. So
awesome. Matt@birchal.com for all the listeners out there. Matt, thank you again. Stay safe, stay well, and I'm sure this isn't going to be the last that we hear from you. So thank you for being on the podcast.
Excellent. Thanks, Jace.